Welcome to the deep dive. Today we're zeroing in on XPeng Inc., a major player in China's smart electric vehicle market, focusing on that compelling mid to high-end segment.
Right. And what makes them particularly interesting, I think, is that dual focus. It's not just the EVs themselves, but also the advanced intelligence, like their internally developed ADs, the advanced driver assistance systems.
Exactly, the tech side. So for this deep dive, we've got their 2024 annual report right here.
We do, straight from the horse's mouth, so to speak. It covers the fiscal year ending December 31st, 2024. And our goal is really to unpack their key business areas, look at the financials, and understand their plans, all based on what they've officially stated.
Okay, let's get into the nitty-gritty then. When we talk about XPeng, what are the core parts of their business? What are they actually selling and doing?
Well, their primary business, unsurprisingly, revolves around their smart EV models. In 2024, they highlighted several key vehicles. You've got the P7, their sports sedan, and the updated P7i.
The P7i. They did something new with the doors on that one, didn't they?
Yeah, exactly. In March 2024, they launched a new two-wheel drive version with those striking scissor doors. Kind of flashy.
Definitely gets attention. What else is in the lineup?
The G9 platform is crucial. It actually underpins some key collaborations we could talk about later. Then there's the X9 model, which saw a new version in September 24, and a further 2025 edition just this past April.
Okay.
A really significant addition was the MONA M03. That's an all-electric hatchback coupe, launched in August 2024. It boasts a pretty competitive range, 515 to 620 kilometers CLTC.
And that MONA brand, that's tied to one of their partnerships, right?
That's the one, yeah, the DD collaboration. We'll get into that. And rounding out the key models mentioned is the P7 Plus Ara, launched November 2024. They position that as a spacious sedan, featuring their in-house Hawkeye 8S across the range.
So pretty diverse lineup. And beyond the actual cars, you mentioned the ADAS software.
Absolutely. A core part of their business is the in-house development of their full-stack ADAS software. That gives them, more control and potentially a key edge in the market.
Right, owning the tech. Now, owning an EV, it's not just the car, it's charging it. What did the report say about XPeng's efforts there?
They're clearly investing heavily. By the end of 2024, their self-operated charging network had grown to 1,920 stations.
Wow, that's quite a few.
It is. And that breaks down into 1,506 supercharging stations for the faster top-ups and 414 destination chargers, the ones you might find at malls or hotels.
And are they powerful chargers? Speed matters?
That seems to be a focus. They highlighted the rollout of their high-power 480-kilowatt S4 and S5 supercharging stations. Those now cover 165 cities, including all the major Tier 1 and new Tier 1 urban centers in China.
So they're building out infrastructure to support the cars. Makes sense. Now, 2024 seemed like a big year for partnerships. Volkswagen and DD stand out. Let's start with VW. What's the story there?
The Volkswagen collaboration is, it's pretty multifaceted. At its heart, there's a joint effort to develop two B-class EVs, specifically for the Chinese market, using the Volkswagen brand.
Okay, but using XPeng tech.
Exactly. They'll leverage XPeng's G9 platform and their software expertise. This is backed by a formal technical framework agreement. And, significantly, VW made a hefty investment, about $705 million for a minority stake in XPeng, which closed late 2023.
So, real skin in the game for VW. What else does the partnership involve?
Beyond just developing those specific cars, they have a joint sourcing program for common parts aiming for, cost savings and efficiency.
Smart.
And perhaps even more strategically important is their work on EE architecture. That's the vehicle's core electronic system. They're integrating XPeng's latest E architecture into VW's China-specific platform, CMP. The first VW EVs with this tech are expected around 2026.
That sounds like deep integration.
It is. And they broaden that EE collaboration to cover basically all locally produced VW vehicles based on both the CMP and MEB platforms eventually. And one more piece, they agreed to jointly build out charging networks.
Tying into the infrastructure point again.
Right. It'll give customers access to something like 20,000 charging points across hundreds of cities. And they're even exploring co-branded super-fast charging stations. So yeah, it's a deep partnership across tech, supply chain, and infrastructure.
That is comprehensive. It really feels like VW is looking to accelerate its EV game in China by tapping into XPeng. What about the DD deal? How did that come together, and what's the goal?
So the DD deal involved XPeng acquiring Xiaoju Smart Auto. That was DD's smart car development arm. The payment wasn't cash, but rather XPeng shares.
Interesting. So DD became a shareholder.
Essentially, yes. The share issuance happened in stages, starting late 2023 and completing mid-2024. Didi ended up with over 62 million XPeng shares, with potential for more based on hitting certain milestones.
And it wasn't just buying assets, right? There was a broader plan.
Definitely. It came with a wide-ranging strategic cooperation agreement. This covers joint R&D for new smart EVs, and the first result is that MONA MO3 we mentioned earlier, which started deliveries in August 2024.
Okay, so the MONA MO3 is the first tangible product from that deal.
Correct. The agreement also covers things like operating XPeng vehicles on Didi's ride-hailing platform, collaborating on marketing, finance, insurance services, sharing charging infrastructure, working on robotaxi development, and even looking at international markets together.
So the MON003 is kind of designed with that ride-hailing market in mind, leveraging Didi's expertise.
Precisely. It taps into Didi's platform and, their insights into what that market needs. It's fascinating seeing these partnerships actually lead to products and services hitting the road.
Yeah, it really is. But with all this rapid growth, these big deals, there must be some significant operational headaches. What challenges did XPeng flag in the report?
They pointed to several key areas, manufacturing and supply chain, for instance. They mentioned it's getting harder to accurately forecast demand, manage procurement, warehousing, transport, basically handling components at much larger volumes.
And if they get that wrong?
Well, it could lead to production delays, higher costs, that sort of thing. They also acknowledged the risk of inventory issues, either having too much obsolete stock or not enough of what they need. They even mentioned past losses related to stopping production of the G3i and P5 models.
Right. Forecasting demand in this market must be incredibly tough.
Absolutely. And then there are the ongoing risks of cost increases or shortages for critical components, things like battery cells, semiconductors, aluminum. That affects the whole industry, but it's a major concern for them too.
Those supply chain pressures are definitely a global thing right now. What about the regulatory side? Especially being a Chinese company with international investors listing shares.
Yeah, the regulatory landscape in China adds another layer of complexity. They highlighted their use of a VIE, structure variable interest entity.
That's the structure many Chinese tech firms use for foreign investment, right?
Exactly. It relies on contractual arrangements rather than direct ownership. And there's always an inherent risk that Chinese rules could change, potentially affecting how valid those contracts are seen.
Okay, that's a background risk. Anything more specific?
They mentioned new and proposed Chinese laws about overseas securities offerings. These could mean more filings, reporting, maybe even cybersecurity reviews. They specifically noted they made filings with the CSRC, China's securities regulator, for the Volkswagen and Didi share placements.
So extra hoops to jump through for international deals and listings?
Seems that way. Plus, the EV business is just incredibly capital intensive. They need external funding like the VW investment. But that carries risks, too, like diluting existing shareholders or agreeing to restrictive conditions.
Finally,
they touched on the growing body of regulations around data privacy, cybersecurity, developing and testing intelligent connected vehicles, including over-the-air updates and consumer rights protection, all areas needing serious attention and resources for compliance.
right, navigating that regulatory maze is definitely crucial. Okay, let's pivot to the money side. How did all this activity translate to their financial performance in 2024? What were the highlights?
Well, the big headline was strong revenue growth. Total revenues hit RMB 40.9 billion in 2024. That's a pretty significant jump from about 30.7 billion in 2023.
Okay, nearly 41 billion RMB. Where did that growth come from mainly?
The main driver was still vehicle sales, which rose from 28 billion to nearly 36 billion RMB. But what's really interesting, I think, is the growth in their services and others segment.
What does that include? Like charging and software?
Exactly. After-sale services, charging, software subscriptions, things like that. That segment grew substantially, from about 2.7 billion to over 5 billion RMB in 2024.
Wow, almost doubled. That suggests those recurring revenue streams might be gaining real traction.
It certainly looks that way. It's becoming a much more significant part of their overall revenue picture.
That's definitely a positive sign. What about the costs involved in generating all that revenue? Did they also increase?
They did. Cost of sales rose in 2024 to 35 billion RMB, up from around 30.2 billion in 2023. Breaking it down, vehicle sales cost about 32.9 billion, and the cost for services and others was about 2.2 billion.
So costs went up, but revenue went up more.
Mm-hmm.
How did that impact their gross profit?
That's the key relationship, exactly. And the news there was very positive. Their gross profit showed a huge improvement. It went from just RMB 451 million in 2023 to a much healthier RMB 5.8 billion in 2024.
A massive jump, so their gross margin must have improved significantly.
It absolutely did.
Hmm.
It indicates they became much more efficient in, the basic economics of building and selling their vehicles and services during 2024. A definite step towards profitability.
That's great progress on the gross level. What about operating expenses? Particularly R&D, which is so vital in this tech-heavy industry.
Right. R&D expenses were still substantial, but they actually saw a slight decrease in 2024. Came in at about 2.8 billion RMB compared to roughly 3.1 billion in 2023. Still higher than 2022, though.
Interesting. Any idea why R&D dipped slightly?
The report breaks it down into employee compensation, design work materials.
Hmm.
Maybe it's just that the timing of certain projects wrapping up or starting. It's still a huge investment area for them.
Okay. What about selling and marketing? With new models and partnerships, I'd expect that to rise.
And you'd be right. Selling and marketing expenses increased to about 3.5 billion RMB in 2024, up from around 2.8 billion the year before. Likely reflects efforts to promote the new models like M&A and push expansion.
Makes sense. And administrative costs.
General and administrative expenses also saw a bit of an increase, up to about 1.9 billion RMB.
So a bit of a shift, maybe. Slightly less on pure R&D in 24, more on getting products out there and managing the growing business. How did all this add up on the bottom line? Still a loss.
Yes, they did report a net loss for 2024. But, and this is a big but, it was significantly reduced. The net loss shrank from a hefty 10.4 billion RMB in 2023 down to 5.8 billion RMB in 2024.
So they cut their net loss almost in half. That's a major improvement.
It really is. It clearly shows the positive impact of that revenue growth and, crucially, the improved gross margins flowing through. Definite progress towards profitability.
Okay, one last financial piece. Cash flow. How did that look for 2024?
Well, in 2024, they actually used net cash in their operating activities, totaling about 2 billion RMB.
Wait, used cash? I thought 2023 was positive.
It was. In 2023, operations provided about 956 million RMB in cash. So 2024 saw a swing back to using cash from operations. This is influenced by the net loss, of course, but also non-cash items like depreciation and, crucially, changes in working capital.
Meaning things like inventory levels or how fast they collect payments?
Exactly. How much cash is tied up in inventory, accounts receivable, versus how much they owe suppliers, accounts payable. That swing suggests maybe inventory built up or other working capital changes used up cash during the year. The report mentions their end-of-year cash balance, but didn't give the specific number in the bits we saw.
Okay, so financials show strong revenue and margin improvement leading to a smaller loss, but operating cash flow dipped negative again in 24. Good overview. Now, looking forward, what did XPeng say about creating value for shareholders? Are dividends or buybacks on the table?
They were pretty explicit about dividends in the report. They stated, and I'm paraphrasing slightly, that they plan to keep most, if not all, of their available funds and future earnings to reinvest back into the business funding, development, and growth.
So, no dividends anytime soon.
That's the message. They said, as a result, we do not expect to pay any cash dividends in the foreseeable future. They did add the usual caveat that the board could decide differently later, depending on performance, capital needs, etc. But the clear focus now is reinvestment.
And share buybacks. Any mention of those?
Nothing mentioned in the excerpts we reviewed. So the strategy seems purely focused on growth through reinvestment, not direct cash returns to shareholders right now.
Got it. Growth first. So as we wrap up this deep dive into XPeng's 2024, what's your overall assessment? Where does this leave them heading into the future?
I think the 2024 report paints a picture of, well, significant progress on several key fronts. The strong revenue growth, especially seeing the services segment pick up steam, and the really marked improvement in gross margin, those are definitely encouraging signs.
And the big partnerships seem crucial.
Absolutely. The collaborations with giants like Volkswagen and Didi aren't just talk. They're resulting in products like M&A, joint development plans. They seem central to XPeng's ambitions for scale and market access. And they're still investing in R&D and their charging network, which is vital long-term.
But it's not all smooth sailing, as we discussed.
Not at all. They still face major headwinds. Managing that increasingly complex supply chain, navigating the tricky regulatory environment in China, the sheer amount of capital needed to compete in the EV space. These are significant, ongoing challenges. And, ensuring smooth operations and ethical conduct as they grow.
So the potential is there, but execution is key.
That sums it up pretty well, I think. XPeng showed positive momentum in 2024. But their future success and ultimately creating that long-term shareholder value really hinges on managing these risks effectively, fully leveraging those partnerships, and staying on that path towards sustainable profitability.
Some really valuable insights from digging into XPeng's own report from 2024. It's definitely a story of growth and bold strategic moves, but set against a backdrop of intense competition and complexity.
Precisely. Those strategic partnerships and their continued product innovation, those will be absolutely critical things to watch going forward.
Okay, and on that note, here's a final thought for you, our listener, to mull over. Considering this incredibly fast-moving smart EV market in China and all the complexities of international partnerships and regulations we've talked about, what do you think is the single biggest opportunity for XPeng in the next few years? Or, conversely, what's the most significant hurdle they need to overcome? We definitely encourage you to check out the full annual report if you want even more detail, and always keep an eye on those broader industry trends influencing XPeng. Thanks for tuning in to the Deep Dive.